Facebook shares fell sharply again on Tuesday, and two top U.S. financial regulators called for a review of the circumstances surrounding its troubled initial public offering last week. The separate calls for review by Securities and Exchange Commission Chairman Mary Shapiro and FINRA Chairman Rick Ketchum added pressure on the company, its underwriters, and the Nasdaq, all of which have taken blame for the stock's harried opening and subsequent sharp decline. After Friday's nearly flat close and Monday's 11% plunge, Facebook shares were down 5.9% to $32.01 in mid-afternoon trading. At that price, the company has shed more than $16 billion in market capitalization from its $38 per share offering last week. Volume was again heavy, with 74 million shares changing hands. That followed turnover of 168 million shares Monday and 581 million on IPO day.
Anytime any research analyst reduces their estimate for revenues, it's not good news for whether it's Facebook or any other company. In this case, of course, Morgan Stanley is not only a respected company, but it was the underwriter of the shares. So it creates some confusion, number one, but number two, it's not good news. And there'll be some institutional investors, savvy investors that'll go from being optimistic about Facebook, buying Facebook, to turning around to selling it short.
JP Morgan Chase and Goldman Sachs, which were also underwriters on the deal, each revised its estimates during the roadshow as well. Brokers who overordered shares in the expectation that supply would be limited continued to complain they received too much stock to handle and were left in the dark about forecast changes. Johnson said the Facebook IPO will certainly have repercussions on future IPOs. He predicts investors will be wary for some time. In the immediate term, he said investors are going to continue to try to sell short, and then it will be up to the young company to prove it can grow at a rate that justifies its lofty valuation and demonstrates its maturity.
You're going through a process now where you have a lot of very substantial owners of Facebook. Their confidence has been a little bit shaken. Some of them are going to try to reduce their positions. So we're going to go through a grinding process of trying to eliminate sort of the weak holders of Facebook. It's going to take some time to get through those so-called holders that are weak holders. It might take as much as 2 to 4 weeks before we grind through that supply. And then we'll start to see the stock trade as it should trade on the basis of fundamentals, and hopefully not speculation, or those that are, we call them flippers in the business, those that buy the stock on the public offering with the intention of just selling it as soon as they have a profit, which they don't this time.
Thomson Reuters StarMine estimates a 10.8% annual growth rate, almost exactly the mean for the technology sector, which would value the stock at $9.58 a share, a 72% discount to its IPO price. Marisa Christian, IB Times TV.